This is the video for the partnership return, Form 1065 for Rock the Ages. And we are going to muddle through it together because I have not done a Form 1065 tax return in a long, 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 long time. But anyway, let's get started. All right, so I'm already in ProConnect and I'm doing a new client or whatever, selecting the client, creating a client. Oh, I want to add a new client. Let's do that. It is a business. Rock of Ages. And I'm going to, of course, add my name at the end. All right, let's see. 555. I don't know if it'll let me keep that, but we'll see. I don't see an email. We have an address. 6102 Wilshire Boulevard. Suite 2100. Los Angeles. Oh my gosh. Did I spell that right? Yes. California. 90036. Not too worried about all this kind of stuff, but just remember it will give you like error messages if you don't have it. All right, so I've already used that that number's already used, so I'm just gonna keep adding a number at the end until we get one that hadn't been used. Okay, we're a 1065. And it just says current year, so I'm gonna assume, well, the answer that I have is a 2020, so I'm gonna say 2020. But I don't think it really matters. Next. Okay, let's just go straight to input the return. Partner info. We have Ryan Ross. There's one, two, three, four of them, and they're equal members. All right, social 111, 11, 1112. I'm just going to put everybody at this 6102 Wilshire Boulevard. Type of entity. They're all general partners. All right. I'm going to keep adding the partners in, but I'm not going to record it. So, okay. So I have everybody in. All right. And then right here it has this partner percentages. I don't want to save any of that. So he's 50% on everything. I'm sorry, not 50, 25. I guess that's what they want. So I'm going through and doing it for all of them. All right, then on to income. All right, gross receipts are the 4,800,000. Let me make this a little bigger. 4,800,000. It having returns and allowances, interest income. Oh, look, notice we have the Paycheck Protection Program from COVID already in there. All right, interest, I'm pretty sure is a pass-through. A pass-through item. So pass-through K1s, let's see. I would call it a pass-through. Oh, that's not what that is asking. All right, guarantee payment, interest income right here. All right, so that's where the interest income is going to go. The tax exempt interest income is also going to go over here somewhere. Let's see if we can find it. Tax exempt income, tax exempt interest income. I don't know why that says adjust. Enter tax exempt. Okay, so I don't put it here at all, maybe. We'll see. I'll leave it off right now. All right, and then stock sales are also going to go on here somewhere. Was that up here on a Schedule D? Charitable contributions. Okay, before I put that 4,000 in, let's just read and see what happened this year because I'm just kind of jumping in and maybe we should see what all has happened here. All right, so with the revenues, fees and commissions, taxable interest, tax exempt interest, and a net gain on stock sales. And then further down here, let's just make this big. All right, we have all of our expenses. There's a 179 expense in here. Some guaranteed payments, some business meals, travel, blah, 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 blah. Okay. Recently, Rock has taken advantage of bonus depreciation and Section 179 deductions and fully remodeled the premises and upgraded its leasehold improvements. This year, Rock wrapped up its model with the purchase of 20,000 office furniture, for which it will claim a Section 197 deduction. For simplicity, assume that Rock uses the same cost recovery methods for both tax and financial purposes. No depreciation adjusted for Altman. Rock invests much of his excess cash in non-dividend paying growth stocks and tax-exempt securities. During the year, the LLC sold 2 securities. On June 15th, Rock purchased 1,000 shares of Tex and Corp stock for $100,000 and sold these shares on December 15th for $80,000. So they have a short-term loss. On March 15th of last year, Rock purchased 2,000 shares of BioLab stock for $136 and sold these shares for $160. So that's 24,000. I don't know where I stopped. I'm sorry. All right. Sold the shares for $160. So $160. So $24,000 gain there. These are transactions reported to the IRS on Forms 1099-B. Rock's basis in these shares was reported. Okay. So that's going to go on disposition of capital assets. Net income per books is $840,000. Is that the 4808? Let's see. Minus 3,968,800. That's the 840. Okay. On January 1st, the members' capital accounts equaled $200,000 each. No additional capital contributions were made this year. In addition to their guarantee payments, each member withdrew $250,000 cash during the year. All contributions and distributions have been in cash, so the LLC has no unrecognized Section 701C gain or loss. The LLC's balance sheet as of December 31st of this year as follows. And we have the balance sheet. They don't give us the cash ending balance or the total assets or their ending capital balances. All right, all debt is shared equally by the members. Each member has personally guaranteed the debts. All members are active in the LLC's operations. For our purposes, assume the LLC is not considered an SSTB, and ROC's operations constitute one active trade or business for the purposes of passive activity and at-risk limitations. The unadjusted basis immediately after acquisition equals the total original cost of all leasehold improvements, or $980,000. Business code. For the Form 1065, page 5, analysis net income, put all partners' allocations in cell 2B2 per IS instructions from the LLC. Okay. All right, so let's just keep going. All right, let's go put in the normal stuff here. Let's go back to our deductions. Let's just get that done. All right, advertising was how much? 380,000. Charitable contributions are 28, but I think that goes over to the Schedule K. Do that in a minute. Section 179 expense. I'm just going to put it here. I think it wants us to do the form, but it's okay. Actually, it's not even showing up there. Oh, that's a pass-through, actually. Employee W-2 wages. Let's go do that. Sorry, I keep getting interrupted. All right, so employee W-2 wages. I think that's where we are. Let's find that. Insurance. Did I miss it? And I have a bad cold, so please excuse me. I bet it's down here under wages. Salaries and wages. $1 million. All right, guaranteed payments. $800 and $600, so 1,000,004. Business meals. I don't know why, but I'm having a hard time making this scroll. $200,000. Travel. Oh, look, there's payroll taxes. Go ahead and put that in. See it. 92,000. Travel is 320. Legal and accounting. I'm just going to put up here in accounting. I know I saw that. $32. Office rentals paid $80,000. And interest expense. There's interest. Let's go put that in. 10,000. And rentals was 80. Insurance premiums, office expense. I just saw that. Let's put that in. 200,000. Insurance. $52. Utilities. $54,800. Okay, so far I think we're on the right track because all these numbers tie out to the answer that I have from the book. So far so good. Okay, so the charitable contributions, I went to the Schedule K and other Schedule K items, and I'm putting it at the 60% limitation. So there's that one. The Section 179 expense we need to put on the depreciation form. I'll get to that in a second. And then net gain on stock sales. It's got to go somewhere. We'll figure that out. Might be a little bit different for tax purposes. We'll see. All right, I'm having a hard time finding where the tax exempt interest goes. So we'll have to I'll have to come back to that. It's going to go somewhere on this Schedule K, but and it's income. This is regular interest. And I could put it on this other income, but it's non-taxable, so I don't think it goes there, but I'm gonna put it here for the moment. But see, then you have to click this box, and I'm gonna say other income, taxable interest, even though I'm pretty sure that's not where it's gonna go, but we'll put it there for now. 3,200. I'll figure it out in the end. Okay, now I'm putting in the balance sheet. So I went to the balance sheet, federal. And it is down here. So let me just make this one. Oh, so annoying. 444000. And we don't know the ending at the moment. Tax exempt securities. 120. Uh-oh. Guess I'll go here. Marketable securities. 436 and 300. Tax exempt for 120, 120. Let me go ahead and put that in. Leasehold improvements. All right, leasehold. Where's my buildings? 960, 980, 960, 980. And we have an operating line of credit. Which I'm going to call another liability. $200 and $160. I'm doing it the right way, right? Yes. Okay. And capital 200,000 for everybody. I may have to put that in somewhere else. Let's go see. So 200. And this all says override, so we'll find the right place to put that. But let me go ahead and put this. So I went to this partner basis worksheet. We'll see if that works. Let's see what's happening on our balance sheet with that. All right, see this other income of 3,200, that's our tax exempt interest. It should be down here. And I got to figure out how to get it down here. It's not where it's supposed to be. All right, let's see what it says here. Okay, so our partner capital accounts did not come through. I don't know why. We'll have to figure that out. Oh wait, I put that in the wrong spot. Did I put them all in the wrong spot? Okay, but still not. Okay, I'm going back to the Schedule K. All right, so I went in here to this Schedule M2, and I put in the beginning balance of 800,000. and the $1 million that they took out. They each took out $250,000 apiece. So the distributions went there. Okay, so that got my beginning capital into the balance sheet. All right, then I'm going to go back to this Schedule K. And I'm going to, am I on the Schedule K? No. Schedule K. Just, I never can figure this. Other Schedule K items. Pass-throughs. Why isn't it changing? That's not what I need. Other Schedule K items. All right, and I'm going to take out this interest that I put in other. Because I knew that's not where it goes. And I'm going to go down here to the M1. Schedule M1. All right, my net income per books is $840. And then income recorded on Schedule K, not in books. It should be income recorded on books, not taxable. Income recorded on books, tax exempt interest, $3,200. Let's see if that works. Okay. Back to the balance sheet. Such pain. Balance sheet, federal. And I'm going to go ahead and tell you that your cash ending is $380. Do I have all the other ending balances in there? Okay, I still have to do the gains and losses and the depreciation. So let me find that and I'll turn the recording back on. Okay, I'm doing the gains and whatnot. So what I did is I came up here to the search bar and I typed in Schedule D. And then I went to Schedule D, just this first one, and it popped up with this, which is not really where I wanted to go. But I did this back to disposition. And then that takes me to where I can put what I sold. So I put in 1,000 shares of tech, date acquired, sold, sell price, cost or basis. And I left this blank because the basis was reported to the IRS. And then I just kept on going down. And now I'm doing the 2,000 shares of BioLab. It was acquired on March 15th, 2019. And sold on 12/15/2020. So that one is the long term. Sold for 160. It was bought for 136. Its basis was reported to the IRS, so won't leave it blank. I think that's it for that. Not real sure, but we'll see. Okay, then for the depreciation for the 20,000 of furniture, that's Section 179 expense. I typed in on the search bar Form 4562, and it came to here, and I went back to assets, and I put in quick entry. All right, so category was, what was this form? Form 1065 Schedule K. Furniture and fixtures was $20,000. I'm doing 20,000 of Section 179. We'll see if that works. Okay, so I'm looking at the forms again. So this is all still correct. Let's keep on going. All right, here's the Schedule K. Let's see what we're looking like there. 979, 1600 minus 20, 24,000. Oh, the Section 1 nights. This should be 20,000 here. I don't know why that's not coming through. To figure that out. 28,000 is good. 2379200. That's good. So just this section from 4562, which we just did. I'll have to see what I didn't click. Oh, look, my tax exempt got down to the right spot. The 100,000, the million, the 1600s. That's good. This is still off, but that's because it doesn't have the 20,000 Section 179 coming out of it yet. All right, that balances out. This does not balance out, but once again, it's off by 20, which is the Section 179. And same thing here. I actually put 840 in here. All right, so it's that 20,000 though that's messing all that up. So I got to figure that out. And this should be 640. That's still the 20,000. Okay, so that looks like the only thing I have to figure out is that 20,000 is Section 179. So let me go figure that out and I will get back to you. Okay, so I think I got it. I had to come back to this 4562 direct input and finish, like this popped up and I had to finish putting in office furniture. This was already there. I had to add the date placed in service. I think that was really the problem. I didn't have that in there yet. And that was pretty much it. And then when I put that in, everything fixed and it all looks correct to me now. So I will, here, actually, let me do this preview form, but then I'll also put up my PDF so you can look at that. But I'm just going to scroll through this on the video and you can look at it and maybe check yours as well. All right, so 1065 as the actual tax return. My income ties out to what it should be. Bunch of questions. I don't really care about those. All right, the Schedule K. All right, everything's where it should be. There's my Section 179 now. My tax exempt interest is here and the distributions and whatnot. My balance sheet ties out. Remember, I just told y'all what cash was of 380, so make sure you put that in. My ending balances tie out. This 640 right here ties this 640 down here on the M2, which it needs to. My net income per books, and then my income over here, and that number ties to this number up here. All right, and then I have the Schedule D. All right, the assets. We have the Schedule K1s for each person. And then Form 4562, which is the depreciation with the Section 179 deduction. Let me look at that Schedule K. I don't know if I got paid. I didn't double check it, but it should be correct because everything else is correct. 244,800. Who is this? Ryan? Who am I looking at? This says that Ryan got 800,000. Interest is fine. Did I leave something out here? Did he get more money? Let me go see. He did actually get more money. He got $800,000 and the other people got $600,000. And I think I just put in 1,000,004 and it divided it by 4. And it gave everybody $350,000. So anyway, I'm currently not going to worry about that. I might fix it, but that's why that's a little bit different. And then his should actually be just a quarter of, I guess, 600. I don't have the other people. One's for the other people. Okay, so to allocate the $800,000 to Ryan Ross, we were over here at this input return, okay? And I clicked on special allocations, and then it popped up with like who gets this 800,000, and then it also popped up with I went to this guaranteed payment for services, and the 14 million popped up. So I put the 800 to Ryan Ross and the 200,000 to the others. And I already did this. I don't know why guess I'll do it again. And then the 600 I split between them all. So there, everything's allocated. And it has saving, so we'll see if it worked. Go preview the form again. I don't know if it will or not. I hope it probably messed everything up. All right, let's just go as K1. Oh, look, 800,000. That's what it should be. And they've got the 200. Let's see if this all still ties out. Yep, that still all ties out. Okay, so we're good. I guess y'all can. I'll print this PDF and I'll post it in Blackboard. All right, y'all have a good day. Have fun doing this. Or hope you had fun doing this.